Hi everyone, this is Jason Burak of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. We had listener requests for an update on Japan and the yen because we've seen just a really big slide in the yen the last couple months after earlier in the year it looked like it was having some kind of a rally. So I'm glad to have back on Knippa. Brief recap of his bio. He's a Chicago Mercantile Exchange trader, successful one for many years, and he also runs shortjapandebt.com and a Short Japan debt fund that investors of high net worth SEC accredited investors can invest in. Thank you for coming back on a Wall Street for Main Street podcast, Trey.
You bet. Very happy to be here again. I did want to correct something in your intro, though. Mine are individually managed accounts, and I'm managing my position as a balance between the bonds and the yen, and so the notion of accredited investors isn't necessarily true. I devised this strategy to try to be the Kyle Bass for the individual investor. So the exact term of accredited, it doesn't necessarily apply. Now, clearly, we're talking about risk here, and people have to be comfortable with the risk parameters. But I just at least want to address that I'm trying to make this available for the individual because there's significant opportunity here.
Yeah, I agree. Japan looks like, we were discussing this before we started recording, that out of all the developed world, the U.S., Europe, the U.K., Japan has the worst math problem out of all of them. So obviously the whole world has debt problems, the U.S. has debt problems, but Japan has been doing, this Keynesian stimulus probably longer than pretty much anyone out there. They did have trade surpluses for a while at least, and now they're starting to run into the math problem of servicing their debt, right?
Indeed, two big line items, and it's just math. I keep a big statistical model that I'm constantly tinkering with, and really, you just said it, it's just math. So if we make some basic forecasts about you're going to get a steady increase in Social Security. Before we went on, you and I talked about that is a huge line item because think about their population dynamic. You have more people retiring, so clearly the expense for the government of managing Social Security and making those Social Security payments, I don't know. I think that's probably going to have to trend higher. Well, the data that I've seen recently says that by 2030, you will have 3 retired people to every one working age person in Japan. How in the world does that math work? So now you have to imagine if you have a lower workforce and then you've got a higher strain on Social Security. By my models, I was being reasonably conservative in saying just 2 line items on their financial statement. If we look at their expenses, let's analyze Japan like they're an individual person. 2 expenses on their financial statement is interest on their outstanding debt and Social Security payments. In my models, by mid-2016, just those 2 parts of the budget would exceed their tax revenue. Well, guess what? What my models didn't build in is what is the recent news about Japan to make the yen fall off the end of the table. You've moved the yen from 102 to 110 in less than a month. Why? It's because they raised sales taxes. Why? Because they were trying to increase tax revenue. So if I'm an individual person, hey, if my spending is out of control, I better make more money. So the government said, hey, we better make more money. We've got to raise taxes. They raised taxes, and wham, look at the GDP print. It's all over the news. It's all out there. Their quarter GDP after that tax increase shows an annualized reduction in GDP of 7.1%. They raise taxes and go into recession. So my model was optimistic, suggesting a 1.5% GDP growth, and that means that just that Social Security and interest expense would go over tax revenue by 2016. If GDP continues to contract, my model's wrong, and it's sooner than that, a lot sooner.
Yeah, and you mentioned something earlier about how long they've been able to keep the game going and their bad demographics. Let's outline some things about their demographics for our listeners who are not that familiar with Japan. They're xenophobic. They really do not like immigrants there. So if there are Chinese immigrants there, American immigrants there, they're gaiji, right? They're not looked at as being part of the culture there. They're not assimilated that well. They're not respected as much in terms of like being able to fit in immigrants. So immigration is not accepted like it is here in the U.S. or other countries where, immigrants come in, melting pot from all these other countries. They don't have that to help their demographics, and their birth rate has not been very good for a very long time. So maybe the government will start issuing some type of scheme there to get people to produce babies or something like that, maybe the anti-China. But, I don't see how they can, with their demographics problem, how they can keep this game going much longer without, monetizing debt, the Japanese central bank monetizing the debt, because I don't think there's demand in the private sector or corporations or anywhere for these Japanese government bonds like there has been in the past.
The story here is the yen, Jason. You touched on a lot of things there regarding their demographics. You also touched on immigration. The United States has a little bit better immigration policy than Japan does, but when you get done listening to this show with Jason and I would encourage the listeners, go out and Google and find out. There's some stories out recently about how the Japanese are treating their Korean immigrants that come in. Man, you talk about some mean, racist people. Holy cow. I mean, I see some demonstrations, trying to throw these people out. Listen, Japan should open its borders. Japan needs immigration. It needs population, because let's remember basic math. There's only two ways to increase GDP. You increase productivity or you increase population. That's it. That's the only two. So why in the world, but this xenophobic thing, that is a way for policymakers to kind of play the misdirection. Like, for instance, Shinzo Abe comes into office, and what does he do? He stirs up nationalism. And you and I, in our previous interview, I talked many times about, there will be books written about this, when the Japanese yen spins out of control, and I mean out of control, 300, 400, 500 to the dollar. When their bond yields spike up, and that they will at some point in time. I can't tell you the exact date, but the mathematics says that it just has to at some point. When this happens, a book will be written about this subject. And I believe that the book will be written like comedy. If you've probably read about Japan, that the idea is that we want to weaken the currency. We're going to weaken the currency down, and that's going to increase exports, and we're all going to live happily ever after. So after Shinzo Abe, the prime minister, takes office, what does he do? He picks a fight with his largest trading partner, which is the Chinese. Wow, brilliant move. You're trying to increase exports, but you pick a fight with your export partners. Awesome. Great plan, Shinzo Abe. Well done. So the point that I'm trying to make here is that if we can go on, Matt, you mentioned population dynamic. You mentioned the birth rate. You got to have each female in a population has to produce 2 children just to maintain population. Once again, basic math. You don't have to go to MIT to figure that out. The birth rate in Japan is 1.3 to every female. This just isn't working. They need immigration. They need more people. But there's a little trick to this. What a lot of people are going to try to feed us is this nonsense that, hey, if we just weaken the currency, then we'll all live happily ever after, because then we'll start exporting and we'll get an influx of currency. If that is the case, then why has Japan's current account gone negative to record levels? The reason is they don't have natural resources. So when the yen gets cheaper, for them, crude oil becomes more expensive. Minerals become more expensive. Imports as a whole become more expensive. Now, think of a Japanese manufacturer. If he sees that he can't hire anybody, Paul Krugman has made a comment about, see how great everything is in Japan? Their unemployment rate is down at 3%. This is a success story. No, the unemployment rate's at 3% because the workers are retiring. There's not enough people to fill those jobs. So go ahead.
Also, Trey, for jobs for Japanese corporations, maybe you could tell our listeners about this. Isn't there a no firing policy for most conditions in Japan? So if a worker has been there for a certain amount of tenure, they'll keep him on the payroll, maybe demote him a little bit and move him back down to another job or something. They really don't like firing anyone as a policy for corporations in Japan, because it seems like their large corporations have kind of taken over kind of the feudalist roles in Japan. At least I've read that somewhere from other people's opinions. Curious about your opinion on that.
Certainly, I've read that, but let's not ignore what's happened to their supply chain. These manufacturing companies know that they don't have the workers there to hire. So what are they doing? They're offshoring those supply chains. So now even a Japanese product turns into an import for the Japanese because it's being manufactured someplace else. And this shows up in the numbers. So the idea, we weaken the yen, we export more. No. The basic element, unless you are a commodity kind of economy like Canada or Australia, if their currency cheapens up, then people come in and they buy their commodities, their oil, minerals, things like that. But in a production kind of economy like Japan has, you need to produce something that people want. You have to be relative in the global economy. And I would go so far as to say that they're manufacturing, what products are we just gasping to get here in the United States? What are we trying to get from Japan? There isn't anything. So
Sony PlayStation, Sony PlayStation, maybe a new Lexus or something. It's not as many. They're not as dominant. I think your point was that they're not as dominant at manufacturing as they were like a decade or two ago when they were pretty much eating everyone else's lunch.
For sure. And so just the fact that they're cheapening the yen, so the yen cheapens up by 8%. Does that make me more likely to buy a Sony Vaio, which is the most horribly put together computer I've ever seen, or am I still going to stick with my Apple and buy my MacBook Pro? Hey, I'm going to stick with Apple. So you got to produce something that we want. It's just not a matter of we're going to produce the same tired thing, and then if we weaken the yen, people will buy more of it. That's just not how economics works. So here we are, and we talked about the yen at the beginning. Investors, listen to me right now. Pay attention to what's going on in the yen. It has had a big move very quickly because of that downturn in GDP. And by every forecast possible, if the government expenditure is going to continue to go up and more people are going to retire and less people are going to be generating tax revenue, et cetera, et cetera, et cetera, and if exports are going to cost more, there was always kind of an artificial bid for the yen. Because if I'm a Japanese company and I sell my computer to the United States, I'm going to end up with dollars. I'm going to sell my Sony Vaio, sell it to a U.S. consumer. I'm going to end up with a U.S. dollar. So if the yen were to break, hey, great, now I can sell my dollars and buy my yen. But now it's exactly the opposite. They have a current account deficit, which means that there isn't a big supply of foreign reserves, a big supply of foreign currency reserves waiting for that bid to come in the yen. There isn't a bid for it, plain and simple. Are interest rates going to go? Another way you can defend your currency is to raise interest rates. How in the world can they afford higher rates? So you can scratch that off the list. That's not going to happen either. So for me, this is going to manifest itself in the yen. And there are so many ways that even the smallest retail investor, I mean, there's ETFs, there's FX trades you can do. But people have got to be aware of what's going on in the yen and at least take some exposure to it according to what your own risk parameters are. Because right now, I think we immediately go to 125 to the yen. And I think easily by a year or two, we could be at 120, 125. And at any given moment, they could lose that currency exchange mechanism and you could see it break really hard. Like I said, the mathematics, they have no choice but to just keep printing and keep printing and keep printing, and it's not going to change.
Yeah, I agree with you, and I think the probability of the yen collapsing long before the dollar, I think the dollar, like Kyle Bass says and others have said, I think the dollar, the way this dollar standard system has been designed with the dollar as a world reserve currency, with the petrodollar, is where the dollar is saved for last. Because so many people are trying to, so many countries, whether it's Japan or China running a dollar peg, or Europe carried the weight before Japan took over and then China took over of propping up the dollar, of propping up the treasury market, of propping up U.S. consumers and subsidizing their purchasing power. These guys have been using mercantilism. It seems like everyone has the recipe for what you said. All these Keynesian central bankers, whether you're a Japanese central banker or a Chinese central banker, you're all reading out of the same stupid playbook where you think you can solve all of your economic problems by just devaluing your currency and boosting exports, but every single country is trying to do this. They're all in a currency war now with each of their trading partners, even though some of the people won't admit this, especially U.S. Keynesian economists won't admit this. And then the end result here is what you see in Japan, like you're talking about with food and energy imports. They're getting just pelted with what I call stagflation. And this is the Keynesian endgame here. This is the best case scenario for Keynesian economics, where you have some innovation in the economy, some entrepreneurship still in Japan, a few products or services, not as good as they used to be, but all this inflation in food and energy, the higher sales tax needed to pay the debt, it's all offsetting the productivity gains like you said.
Exactly. And for me, It's going to show up in the yen first because clearly, who's going to buy this debt? Who in the world would want to buy? Never mind that I referred to the book that's going to be written after the fact and say it's going to read like comedy. They've got inflation targets. Now, would somebody please explain to me what the advantage of having 2% inflation if you've got a yield on your 10-year bond at 0.50? Is that
financial repression?
Is that some kind of a joke? Is that, why aren't the Japanese citizens? Why is this? Never mind. Let's boil down to the fact. They've tried Keynesian economics. They've done it. They've tried to press the button. They said, well, this isn't working. Let's press the button even harder and see if it works. The Japanese economy today is the same size that it was in 1991. Why is that not a repudiation? Never mind, why does Europe want to go down the same road? Why does the United States want to go down the same road? The reason is because it's politically expedient. Hey, the government wants to increase spending. The government wants to help you, et cetera, et cetera. That is a great line for a politician to get reelected. And we are being sold a raw bill of goods that suggests that inflation is a good thing. By what definition? How does this help the Japanese citizens to have inflation running at 2% with a yield? If I'm a retired person in Japan, I am throwing a fit right now. I'm getting no yield on my savings, and yet the cost of buying stuff is going up. How in the world is that positive? I just don't get it.
Yeah, I completely agree, and that's why the Japanese now are looking, especially the large Japanese pension funds, are hiring U.S. stock people to start moving their money out of JGBs, which is another reason why the Japanese central bank is going to have to monetize debt, because the demand's not there for the pension funds to hold it anymore, and they're starting to look for U.S. equities and other undervalued assets outside of Japan. Now, Trey, another reason why, in terms of asset price inflation, our listeners always ask about the yen carry trade. Where does the yen carry trade fit into this, with the yen collapsing and maybe asset bubbles outside the United States?
Well, there's many parts to that question. Rather than talk philosophically about economic theory, this, that, and the other, man, let's face it. I'm a trader. I'm looking for results, and I'm looking for profit. I hate to sound shallow, but it's true. So I see, based on the math that we're looking at here, start small and short the yen. Now, how do I suggest you do it? You can either be long dollars, which is fine. The dollar has some things going against it. Obviously, some things for it, something against it. But if you want to balance and you don't necessarily want to be long more U.S. dollars when you short the yen, you can also get long something versus yen. For me, I own a rental property in the state of Texas. It's near a bunch of refineries. And that rental property, my mortgage is in yen. So that means that I take my rent in U.S. dollars, and then I turn around and I pay my mortgage in yen. Well, guess what? Just in the last month, my monthly payment has dropped somewhere in the neighborhood of 9%. So that's a good thing, and clearly if the yen completely runs out of control, runs to 300 to 400 of the dollar, it's going to take me less and less dollars to make that monthly payment. A little more complicated way to do it, but one way to do it. If you don't want to do a normal FX trade and sell the yen versus dollars, I own gold in yen. It's not the easiest trade to put on, but that's what I do for my clients, is I've figured out a way that you can be long gold in yen terms. So there's various ways to do it, because the determining factor is, where do you want your long leg? I like my long leg being in a productive asset, which would kind of scratch gold off. No offense to any listeners who are big gold bugs, but owning a productive asset like a crude oil well or a gas well or something like that, and have that mortgage in yen, I like that trade. But just have some exposure. I would implore the listeners. The math is the math. So have some small exposure, be it with an ETF or otherwise. We can talk about more leveraged ways to do it. I mean, that's what I do for a living, is trying to solve that problem, and I do that in the accounts that I manage. But it is that the math is what it is, and there's no getting around it. And Jason, if you would oblige me for a second, I want to tell you about a meeting I had with a guy in New York, a Japanese economist, PhD in economics. He gave me the typical kind of Japanese response. He would smile and nod his head at me and tell me, "Oh, Trey, you're absolutely right." And then he would proceed to disagree with everything that I said. This guy is an advisor to the Ministry of Finance in Japan. And I want to tell the listeners just exactly what's coming out of this guy's mouth, because I nearly fell off my chair and spilled coffee in my lap when he told me this stuff. He says, Trey, and I'm not going to try to imitate his cool Japanese accent, but he says, Trey, Japanese bonds will not break. I said, really? Why is that? He says, because the Japanese investors are happy losing money in the bonds.
Collectivist culture. Right?
I'm like, I'm sorry? That's your plan here, is you've got to count on them being happy and losing money at this? Okay, well, that's one idea. He also said that total Japanese savings is $50 trillion. Well, the government bond market is only 12 to 13 trillion. That means they've got 37 to 38 trillion more dollars to go that the government can borrow. And I said, wait a second, aren't you implying by saying that the Japanese investors are sitting with $38 trillion in cash and it's not invested elsewhere in real estate or in stocks or anywhere else? You're assuming that that's just waiting to buy more bonds? That seems a little foolhardy to me. Thirdly, he says that every time they print more yen, there's plenty of buyers for them. Really? So you're sitting with a current account deficit, which means that I have to convert out of yen. I'm a net seller of yen. When I say I say the Japanese are net sellers of yen to import what they need. So there isn't this artificial bid for the yen, waiting for the yen to break so they can always buy it. He says, oh, there's plenty of buyers for the yen. Really? Who's that? Who are these plenty of buyers waiting for them to double the money supply? Ooh, can't wait to buy those. Well, I'll tell you who it is. That's the government. They are printing more money to fund their own activities of the government. It just is. So for him to sit there and look me in the eye and tell me this, and he was speaking about it like it was policy. Oh, no problem. The Japanese have plenty more savings that we can chew through.
Sounds like a wealth confiscation, like kind of Marxist views there. Like, you know, they're the people's savings in the private sector, it's really ours, and we're just going to confiscate it one way or another, whether it's a VAT tax or forcing people to buy more Japanese government bonds or something like that. It sounds like that's basically the plan, except that maybe in Japan they'll be more polite about it, and they'll just ask the citizens to do it. And because of their collectivist culture, whereas, you know, here in the U.S. people are more individualistic, if the United States government went to American citizens and said, you know, well, we're having a national emergency here with our finances. We want everyone to take 10 or 20% of all your 401k or IRAs and put them in U.S. Treasuries, there would probably be a revolt overnight. So it's just easier to print the dollars, right, and buy Treasuries or U.S. Treasuries or things like that. But it sounds like in Japan, the Japanese, like you said, the people are running their government and their central bank expect the Japanese people to be compliant and just basically almost do whatever they're told.
Exactly. But that's not a policy. I don't know that you can rely on the fact that they're happy losing money in it. You know, that's going to work until it doesn't. But isn't that kind of the basic thesis of my trade, that the Japanese bonds are going to hold up? They're going to print more yen to hold them up, but the bonds are going to hold up until they don't hold up. And when they don't hold up, you better pay attention. This is going to make the situation with AIG and Lehman Brothers look like a picnic. And guess what? The most scary piece of data that I've seen out there yet. You got to check this out. So a Japanese bank owns a bond. By law, it's Tier 1 capital. So they own a bond that's yielding them nothing. So do you know what those banks are doing? They are going down and they are shorting the insurance on those bonds with, credit default swaps, with options on futures and that sort of thing. So that has made those insurance policies very, very inexpensive. And that's what my strategy is based upon, is that I can buy this insurance very, very cheaply. So, but let's remember what they're doing here. They're long the asset and short the insurance on many multiples of their existing assets. That's like you and I buying a rent house. We rent out the house. Our total payments on our mortgage payment, taxes, and maintenance and everything is $4,000 a month. Yet we're only collecting $2,000 a month in rent. So you and I go out and we sell fire insurance on our own house to 100 different people and say, great, if the house doesn't burn, then we keep all that insurance premium and that'll make up the difference. That is what's happening in Japan with their banks right now. They have shorted this insurance to pieces. So
that's what AIG did, right?
Bingo, you got it. AIG, they were long mortgages and short credit default swaps to really smart guys like Kyle Bass and John Paulson and guys like that. So when this thing goes and those banks have to come in and try to buy that insurance back, and they're buying it while they're trying to liquidate the underlying asset that's dropping in value, you better pay attention, because this will be a very, very big financial event globally. So pay attention, and it starts with the yen. Now, what some people argue with me is they say, Trey, they can print their own yen so their bonds will never break. Wrong, and here's why. Think about what a bond is. A bond is an IOU. I give the government money, and they give me an IOU that they're going to pay me back. Okay, fine. Now, if I'm holding that IOU, what is going to make me comfortable holding this IOU if the currency that you're paying me in starts dropping off the end of the table? So when you see big breaks in the yen, you better keep your eye on the bonds, because the bondholders are going to go, I don't want to hold on to this because I'm going to get paid back in wampum, which is a devalued yen. So a weak currency causes a bond market break. It doesn't prevent a bond market break. You're implying that you can come to a crossroads and say, well, I'll have a currency crisis instead of a debt crisis because most of the people won't really know the difference. That's not how it works historically through economics. Currency crisis causes bond crisis.
Yeah, I agree. I really don't. I've looked at this. I've watched Kyle Bass's speeches. I've listened to your other interviews on other programs, and I've read your work too. I don't see a way that Japan can keep this game going without basically destroying the yen, because their debt, in terms of demand for Japanese government bond, it's super saturated, to use a scientific term. I mean, the banks have way too much Japanese government bonds. They've been forced to buy them for too long. Corporations have sacrificed their savings to buy them. They have too many of them. They want to offload. The pension funds have too many. The individual Japanese citizen realizes, hey, wait a second, I'm not diversified, and they're starting to see, that their food portions are shrinking via inflation. Their energy costs are going through the roof after Fukushima. I think the only thing besides destroying the yen that could happen, and I think this has already started to happen, I get your thoughts on this, is the U.S. government, the Federal Reserve, potentially doing a currency swap with Japan, where maybe the U.S. government prints off $5 trillion, right, hands it to Japan. They take the yen in exchange at the exchange rate. The U.S. Federal Reserve sits on the yen, and then that buys Japan, the $5 trillion American buys Japan, I don't know, another year or two to keep the game going a little longer. These backdoor bailout currency swaps that have been going on now from country to country that these bankrupt governments are doing with other bankrupt governments.
Don't forget the story about Japan, that AIG was too big to fail. Japan's too big to save. We can't write that check. And how much are we going to be willing to devalue us in order to try to save them? Because at the end of the day, a lot of people keep telling me, well, Trey, they'll never have a bond crisis because all their debt is held internally. That's a weakness, not a strength. That is a weakness. What's the likelihood? It's not like we're saving U.S. institutions by saving the Japanese government bond market. We'd be saving Japanese institutions. So I find that pretty hard to believe that there's some grand plan. Here's a funny one for you. I had one guy tell me, no, Japan's too important. The IMF will come in and bail them out. The IMF. Do you know who the two largest contributors to the IMF are? The United States and Japan.
Yeah.
I'm sorry, the IMF?
Well, they would have to print SDRs, which would be incredibly inflationary if we got off the dollar standard, right, and went to the SDR, which would be even more inflationary. So it's just I don't see any way that they can do this without printing humongous amounts of more currency, whoever prints it, and it being incredibly inflationary.
Kyle Bass nailed it. He used the guy from Jaws, whose name escapes me right this minute, and he says, we're going to need a bigger boat. And just look, I've got this model. It's right on my computer. If somebody wants to arrange a webinar with me or if you want to see my model, I'll email it to you. It's an Excel spreadsheet, and you can tinker around with it however you want to and change whatever variable. But in my model, with a 1.5% GDP growth, even with, which is, by the way, that's optimistic, and I don't think it's going to happen, that just those two line items, interest expense and Social Security, exceeds tax revenue by 2016. How do you get around that? It just is. By 2016, that's it. And I think that is being very optimistic that they can get an average of 1.5% growth. It's just not going to happen. So the proof is in the numbers. They're going to have to print more yen just to maintain. Everybody listening, you do realize that Japan spends twice what it makes, right? That's like you make $100,000 a year, but you spend $200,000. How long is that sustainable? It's only sustainable with the Bank of Japan. They're printing more yen. Have I made myself clear here? You've got to have some exposure to the short side yen But you got to talk to somebody about what's an appropriate risk level and what is your long leg. Is your long leg the dollar? Is it gold? Is it real estate? Is it whatever? There's a lot of ways that you can skin this cat, and I'm happy to help with questions. And my website, shortjapandebt.com, I put out a newsletter that comes out twice a month. And by the way, every now and then I have the emergency newsletter, meaning that if Kyle Bass is on TV, I send out, hey, guess what? Kyle Bass is on TV today. Here you go. I'm actually speaking about Japan coming up here in New Orleans at the New Orleans Investment Conference. That'll be coming up on October the 22nd. I don't know if any of the listeners are going to be there. By all means, come up and say hello. But I'm going to be on the same stage as Alan Greenspan. Now, in what alternate universe does a guy like me, who is critical of every central banker in the world, belong on the same stage as Alan Greenspan? But hey,
Have you read Alan Greenspan's essay, Trey, about personal liberty and gold before he became a central banker? Did you read that? It was very libertarian. He used to be an Ayn Randite.
No. He and Ayn Rand they did birthdays together. That was they were very close friends. So yeah, I get it. I mean, and it's rather odd considering he's considered kind of to be the father of all this mess. After we know the story here. The NASDAQ bubble busts. He creates the housing bubble. Bernanke pops it. Well, he didn't pop it, but he was there when it popped. So I do find that to be peculiar.
Yeah, I consider, most libertarians, and myself, I'm a libertarian, I consider him basically a sellout or a traitor because, he knew better.
He had it right.
It's not like he had a PhD in Keynesian economics, and he had never read any Ayn Rand or any Austrian school books or anything. He's read a lot of those things, so he should have known better. But he pandered to Wall Street, and he wanted to be famous, and he wanted to make a lot of extra money and sell books. And I think he gets $250,000 or more per speaking engagement. You have David Einhorn paying enormous amounts of money to have dinner with Ben Bernanke now that he's out of office. And the conversation you had with the Japanese finance minister or someone in the finance department, finance advisor. Yeah, Kyle Bass had similar conversations with someone, former Japanese central banks. And then David Einhorn had similar conversations with Ben Bernanke. These Keynesians are all saying the same thing. And unfortunately, Trey, I think the U.S. has a more productive economy right now than Japan. We have the shale oil boom. We have Silicon Valley and amazing technology companies. But we're still headed down that same path that Japan has been doing, I think.
Let me insert something here. Maybe we should entertain the idea that Alan Greenspan did what he did because he had no other choice. If all you have is a hammer, everything looks like a nail. Let's apply that thesis to Japan. So if I'm looking at the central bank here, what else can they do? This business about creating inflation, I said this, that whoever inflation hired to be their PR rep is doing a great job because they're selling us on the idea that inflation is a good thing and something that we should be targeting. Inflation is a negative side effect of central bank activity. But when we talk about Japan, for instance, when we talk about more money printing and more inflation, this, that, and the other, they're doing that because they have to. They're doing that because they're too far gone. They are stepping in and supporting the bond market because they're the only buyers left. This isn't a plan. And I'm from Texas, so everything's a football metaphor. This is not offense. There is no one who can actually believe that, hey, we'll solve all the world's problems if we just print more money, everything will be fine. That just isn't true. Otherwise, there wouldn't be any poverty anywhere in the world. So they're doing this, and they're buying their bonds because they have to. They are the buyer of last resort, is print more yen, buy those bonds. So a central banker, like the one that we've got now, Janet Yellen, when all you have is a hammer, everything looks like a nail. And I have a standing bet with Stuart Varney on Fox Business News that when Janet Yellen leaves office, QE will be higher than when she started. It will be higher, not lower. She's tapering back now, but the minute we have any stumble whatsoever with some of our economic numbers, here it comes. Now, the day we should be worried, and that day's coming in Japan before it happens in the United States, is when the Japanese announce that they're going to buy more bonds and bond prices go down. When that day comes, you better have your finger on the trigger and be aware of what's going on. They announce they're going to buy more, and the price of what they're going to buy drops. That day's coming. And it happened last April in Japanese government bonds. They announced they were going to buy a whole bunch more, and what did they do? They went down in value because it weakened the yen, and the bondholders said, no way, we want out of them. That day's coming.
Yeah, I agree. I think we're approaching Keynesian endgame here for many of the developed world. But have you seen? Obviously, the Fed's announcing taper in public, but you saw the Belgium Treasury purchases on the tick reports, right? Belgium doesn't have the money to buy those things, so I don't know if they're really tapering or not. I don't know what the real truth is behind that. Who's buying all those treasuries? But there's over 300 billion worth of treasuries now that Belgium supposedly owns, and Belgium's economy is not that large. So someone's stuffing it there, whether it's China or the ECB or the U.S. government in a proxy or something like that. One of the Fed's proxies off the Caribbean or something like that. Anyways, Trey, I just want to thank you very much for your time. This was a great interview. I definitely agree with you that being short the yen is a really good hedge to, besides, owning precious metals, it's a good inflation hedge because I think you and me both agree, and we agree with Kyle Bass, that when you look at all these countries, whether it's the developing world or the developed world, Japan's been doing really stupid policy for longer than anyone else, and I think their currency is going to take the brunt of it first, probably before almost any other currency in the world.
Absolutely. Speaking of Belgium, I'm doing all I can to help the Belgian economy because I'm a big fan of the Belgian beers. But surely it's not near what they need. But I'm making my contribution.
Well, I'm sure they appreciate that, and they have good Belgian chocolates and Belgian beer and waffles. But I don't think they're selling 300 bill. I don't think they're selling 300 billion of them.
No, I'm drinking a lot of Chimay, but not quite that much. So.
Okay, well, Trey, thanks again for your time, and we'll have you back on again for another update on the yen. Where I think it may be at 115 to 120 probably in the next 6 months, if not worse than that.
I agree, and obviously, and I've got positions backing that up. I put my money where my mouth is, plain and simple.